Good day, everybody. Today is the 3rd of 11th. I'm sorry, 3rd of November. Gonna get started here in a few minutes. We have a good guest today. We have Alexander. I don't know if it's Alexander, if he prefers Alex. We'll ask him when he gets on the show here in a minute. He's coming on. Um, we'll be talking with him. He's the founder of SaaStock, so we'll talk a little bit about what happened at SaaStock, what his experience was of it. It'll be there in a few minutes. Just a quick note. We just posted it today, so later on, or I should say on Tuesday of next week, we're gonna have Axel Egre, and he's gonna be talking about building B2B SaaS MVPs. He's built dozens of them, and he's going to be giving advice about this. Um, yeah, good to see my little audience. Let me just type them out a message. Before we get started, looks like we're waiting here for a few more minutes with Alex. So I just wanted to share something quickly with you. Transition to this. This is another report I found. I mentioned this in a previous thing, and I'll keep mentioning this. It's a report I found on dealroom.co. So, Dealroom, they collect all sorts of data about investment, technology, SaaS, our industry. So this is a report, interestingly enough, about early stage SaaS investment in Europe. And I just wanted to go through this report and why I thought this report was so interesting. Um, so what we see is that first half of 2022, investment in what we call early investment, so pre-seed, seed, Series A, was pretty strong. There wasn't a big drop off from 2021, and now we see in Q3 there's a drop off. So we are seeing some signs of decline, but the type of decline we're seeing, in general, the investment on the smaller side or the small rounds, the drop off has been less than what we've seen in other parts. So it's holding up better than we expected. I guess that's a good point. But I think some drop off is to be expected. Don't live in a perfect world. And that a little hard to everybody. So I thought this was interesting. So we are starting to see a bit of a drop off, but we've seen a far larger drop off in the later rounds. It's kind of normal. I think the market's kind of waiting for it to be caught up. A lot of companies that went public a few years back sold stock of the company. I'm not sure they'd be able to do that today. They'd have to have probably be focused a little bit more on profitability or show a clear path to profitability. Interestingly enough, here as well. So fastest growing European countries by early investment. So again, we got some interesting companies in there. Iceland, Slovenia, Georgia, Slovakia are all in the top part of that. These are all our smaller countries. So I think this is a little skewed. Of the major developed economies, you've got France, Austria, Spain, Germany. So they're all kind of in the middle of the pack there. What's a little worrisome is the UK is down quite a bit. Yeah, this data is mostly European focused. So yeah, early state of Europe, but they do compare this to other markets, and we'll talk about that a little bit. I think it's interesting to see which markets are attracting the most interest. These are all, a good rule of thumb is focus on industries that are capital intensive. So financial technology, capital intensive, healthcare, very costly, energy, transportation. So industries where there's a lot of people, there's a lot of money. These are all good industries. So still the same things. Fintech and healthcare, energy and transportation are still the big focuses there. Food. And Dealroom actually does a good job of breaking this out into other numbers. I just send a message to our guest who should be here. Um, he'll be second. That's the great charm about into European startups. So early stage investment into European startups. And it's interesting. We European startups are claiming a larger share of global venture capital. And so it's now over 20%. So we see the US is around 50. Asia's share has shrunk, and Europe's share has grown. So interesting. And so it's kind of interesting to see what's happening in the marketplace and who's getting a share, who's doing the innovation. It'll be interesting to see what happens as we go forward, which local economies do the best job of creating great knowledge economies. So again, approximately 30% of all seed stage capital is now going towards Europe. So good to see. That's good, but it's good to see that everybody is doing well as well. And it's interesting to see that North America is trending down. I'd be really curious to see why North America is trending down. Is because more people are bootstrapping? Is it because more people are looking for alternative ways to keep their company going? I don't know. Good question. Maybe we'll ask Alex when he's on here in a second. Send him another message. Second here. I'm not in here. About this? That's the charm of doing stuff live. All right. So what else do we take away from the report? So we see that 30% of European seed state. I'd be curious to know more about those numbers. That's one of the things about numbers is numbers are interesting, but they're kind of dumb. They don't tell you the story behind there. So what'd be interesting about this is what are other markets doing? Is there less activity there, or is it alternative activity? So that's kind of the question I would have. I really wish Alex were here so we could ask him for some. But in general, the investor landscape continues to expand. So we see other investor groups. I don't know if these are alternative people. Yeah, good afternoon. Just got some more people in the group. Good afternoon to you too. So there's the investor landscape continues to expand. So it continues to evolve, and I associate that with getting richer and richer. So that's good to see, and hopefully that'll continue. Yeah, I think this is a really interesting. So the right investor can make a big difference for startups, especially the early stage. I think that's a really good point. That's a really good point on the investor. Working with a company that really understands your market, that really has the right people there to give you advice. I think the investors love to give advice and they ask a lot of questions, but the more the better advice, the better the questions, the more they'll be able to help you. So question is there's always getting money, and then there's the kind of quality of money you can get as well, which is it's always interesting to see who has invested, and that's really telling. And I think the better the money is, especially some of the people are listed in here. I think they may have also paid for the report, so we need to be careful about this. I think what's really interesting about Deal Room as well is you can see which investors, if you go on there, you can see which investors are active in your industry. So, and that goes back to the quality of the money. So if you can, if you're working in fintech, you want to find investors who are invested in fintech. They're going to give you better advice. They're going to help you figure out your value proposition and get headed on the right track earlier. So Deal Room, and I think Deal Room, some of the services are free. They don't even cost anything. I don't think only if you export data do you pay for it. But I'm not exactly sure what their business model is. But they've got tons of reports on this anyhow. But it's interesting. So there are angels getting involved in more and more rounds. So Chris Adelsbeck, wow, pretty incredible. Invested in a lot of different things. Xavier Neal, PayFit, really well known unicorn. So a lot of notable companies in here. So interesting. Very. So they show that angel investment just in general has gone up from 2017, and we're over 2017 levels, by quite a bit actually. If you look at the amount, the numbers are pretty impressive. So the overall amount of activity is up, and the monetary activity is up as well. So I thought that was really interesting. Here's some more notable companies that have been started with angel investors. And then I thought this was the final slide, and I think a really interesting takeaway from this thing, which is, and it goes back to the ecosystem, what's happening in this industry. So we're seeing, as, and this is something, as people start companies and they're successful, whether they exit or what have you, typically they go back and invest into this industry and reinvest into it. So that's what we're starting to see. And Europe, Europe's ecosystem, Asia's ecosystem, for a long time, the investor ecosystem, we're dependent upon the US and venture capital from the US, and especially for the later rounds. And what we're seeing is that as these ecosystems mature, the SaaS ecosystem, the investors are staying active and are participating later in rounds. And so they actually said this: angels are mostly active at the early stage, but sometimes participate in later rounds. So, and that's what you want. You'd like to have European investors also investing in U.S. companies, and same with Asian investing in U.S. companies, and basically for this just to be a worldwide market for ideas and talented people. That's how we'll get to a point that's most interesting for this. See if I can get him on here. Kind of interesting. So I thought this was a really interesting report. If you go to Deal Room, you can see they have all kinds of different reports here. So here's the reports. And so impact startups. This was another interesting report I read. So impact investment is down. But that's not too surprising. Money's a little tighter, so impact. But at the same time, I see that there's lots of funds investing and who have their powder dries into fintech is up. So fintech, money intensive, anything that has to do with a lot of money always is going to attract other money. The LATAM ecosystem, not really sure. I haven't read that report yet. But I recommend these reports. They're just really fascinating, and get a good glimpse of what's going on in an industry and learn more about that. While we're waiting for a few more minutes, I wanted to also talk about a favorite blog that I read quite a bit, which is Blog from Dave Kellogg. We'll try and have him on from Balderton Capital, so he's kind of an investment there. And Dave is a very popular speaker, very successful speaker, and talks a lot about this. So he does a great job of breaking out what investors are looking for and what data they're going to use to measure you by. So if you're not familiar with blog, let me put that in there. That's something you'd be interested in. I do highly recommend these two sources: Deal Room, the reports. It's absolutely fascinating what's going on. Hold on, just give me 1 second. if you can get on here in a second here. So it's very interesting to see, as I was saying, what's going on in these different things. Yes, doesn't show up. If you have some things that you look at out there in the audience, I'd love to you can put them up in the chat, and I will definitely take a look and post those going forward. Again, next week on Tuesday, we'll have Axel Egri. Axel runs at kind of not an incubator, but he helps companies build their MVPs. There's companies called Highlights, and so we had a conversation. We're talking about SaaStock, and then recently I saw another report about how much you should be spending on your MVP, and I think it's something that's really fascinating because once you start getting going on something, you have an idea. I think a question for a lot of people is, okay, well, after that, how do I get to this next step of MVP? So how do I get to this point? And I think you want to do it in a way so that you're having something that's demonstrable, but also that you haven't wasted time or money or any resources. And I think it's something that's just it's an area that's just loaded with pitfalls. So let's see if we can send Axel. Axel again, or I mean, Alex. All right. Should be in here any second. Well, be interested to know. Go take a look at what's going on at Shifted, since we got a few minutes here. So another Nordic VC Inventure closed a $150 million fund and opens for angel investments. This is something that I predicted it would happen as kind of the later investment rounds got less attractive, that the VCs would start seeding their own startups more. Seeding and doing angel investments, notoriously difficult, hit or miss. You never know what's going to hit or what's going to miss. I mean, you know, there's correlations to success, but there's no hard rule. This is not easy stuff, of course, and nor is it easy to start or found a SaaS or to get that going as well. But there's just going to be a point, which is okay. So you've got a $150 million fund. Hold on one sec. Okay, I think we're maybe getting closer to getting our guest here. So, again, you can see that these funds, they're going to have to do something, right? And I think this is one of the things I took away from the report too, which is what I would be concerned about our industry is that if we see a collapse of the early investment. Right now, you know, it looks pretty stable. And so these later rounds, I think, will get straightened out as these companies work on becoming more profitable. But I think what would be really concerning for me is that if we see a collapse of people are stopping to fund smaller companies or stopping from founding even. Hold on. Yeah, well, they'll be on here. Alex will be here in any moment. So let's go back. So we can see there. What else is going on? Going global. How startups are scaling into Sweden. Well, the Swedish, they speak English very well, so I don't doubt they're having too much problems, and they tend to be really good. All the new first-time European VC funds of 2022. Oh wow. Let's see what they say here. So female founders. Fund sized, so they're working on getting 20 million to invest in pre-seed and seed companies. Australian Odium Capital, targeting on 150 million. Galleon EXE, and they're doing a seed fund. I guess they're doing seed fund. So they're okay. So they're going to invest in 12 French tech companies a year across different sectors. So, oh hey, 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 Alex. Hey, good. I'm gonna bring you in. Okay. Hold on here. Okay. Good. Good. So our guest is here, Alex. If you want to tilt your camera up a little bit, it won't cut off your head. Um. Okay. How you doing? You were on vacation. Oh, we just lost your camera, but okay.
Was very hot in Malta.
Okay, so Malta has better weather than Ireland, I guess. And yeah, I think that makes sense. Did you get a chance to do any diving?
I didn't. And do you know what? But I was run down before the conference. In fact, a lot of the team were. We obviously kind of working quite hard and the time of year and whatever. But a lot of the SaaStock team were feeling a little bit run down pre-conference, and I arrived in Dublin on the Sunday before the event, feeling like pretty shitty. We usually on the Sunday go out for a big team dinner, but there was lots to do, and a few of us were not feeling great, so we didn't do that. And then actually, it was the first sort of conference that I'd ever really kind of been feeling pretty unwell at. But given that it was the first one in 3 years, I didn't want to miss it, and I kind of powered through.
Yeah.
So when I arrived in Malta, I was even more run down. And the first kind of morning, I just took myself to the doctors to get checked up, and he diagnosed me with bronchitis. And so I got some strong antibiotics, and therefore that one of the unfortunate things was that I couldn't really go in the water or the swimming pool and stuff like that. So long answer to no diving, no playing with the kids in the pool either. And they kept saying like, "Daddy, come and play with me," because they were watching other parents play with their children, and I was just kind of on the sidelines, sort of like just making sure that they didn't drown.
Well, hopefully you're feeling better now. You're
on the mend, but it's been I'm on my 4th week of basically having this I guess kind of virus as such, but I do seem to have turned a corner and seem to be on the mend. Thanks.
well, good. Well, good job. I know I've been a part of the something like SaaStock before. It takes a heck of a lot of energy, and everybody invests so much. And I think and then you have the event. It's like a 3 days or 2 days where you're packed. You've got to go from literally about all day long. A 20-hour day isn't unusual. And you have to pull that off, and you're getting by on coffee and adrenaline and a few and doing that. So great job pulling that off. So
Thanks. Yeah, no, it wasn't easy. I mean, it never is, right? And that's like you've experienced it yourself. It makes it even harder when you're not feeling great. And like it's like really early starts, and then it goes into the evening, and then you've got things like the speaker dinners and so on. So yeah, very kind of long days, but we got through it, and I think it was really good for a lot of the SaaStock team members to have experienced what has been their first SaaStock, because quite a few joined like the beginning of 2020, when we were just kind of putting our plans in place, or putting the team in place for scaling up in 2020, and then COVID obviously happened, and so they've never actually done a physical SaaStock conference and been with the company almost 3 years.
Right.
So for them to actually see it, physically, this is something that you can touch, and it's tangible, and this is the buzz and the vibe and the benefit and the reward that attendees get from coming there was a real big highlight for me.
That's great. And you have another show coming up in May. I guess it depends. For me, there's so much preparation that's coming up already. So you have one that's coming up in Austin, correct?
Yeah, exactly. So there's kind of like no rest for the wicked. We're straight back into it. But I mean, this is what we do, right?
Right.
And one of our team is out in Austin all of next week. I wish I was with him, but just kind of finalising the venues and the exact date. So ideally, we would have liked everything kind of like done by now.
Yeah.
But we were kind of all consumed with the Dublin conference and the return of that, and we couldn't give like as much focus as we wanted, into Austin, apart from knowing that we would be doing the conference there and that we've got a short list of venues that we're in discussions with. So we're just doing the final site visits, and we're finalising, and hopefully we're contracting with one of them, ideally kind of next week. And yeah, like we're back in the US. So we've done US conferences before, but we've done like SaaStock NYC, SaaStock East Coast, SaaStock West Coast, but nothing specifically just for a whole for the whole of the US conference. And then we did a bunch of research. We were looking at like where should we do it, and our market research kind of led us to Austin.
Yeah.
And actually, personally, I've never been, but obviously seen a lot about it, and it's got a great tech. It is a great tech hub, and I've got a lot of friends there. So yeah, excited for it, and yeah, like we're working on it in the background, and more details will be following soon.
It's really interesting. I lived in Austin around 20 years ago when the tech scene was first starting there. And I saw tech spread out from the Bay Area, and it's now reached the four corners of the globe. But it was the same thing in Austin. When it first got to Austin, they didn't have the marketing talent, they didn't have the sales talent, they didn't have the VCs, and now they've got all that. They've got an independent tech ecosystem. And I was just talking about in Europe, what we're seeing is the VC funds now are more and more active, at least they were until this year, in the later round of investments, which before that was just the big American funds, and now we're starting to see that. Before you came on, I was talking to people, I was showing people a deal room report that they came out where they were talking about European early stage investment. It had been strong for the first part of 2022, and now it's showing signs of falling off a little bit. And I guess that's a good segue for what did you see this year? What has changed? What did you see? It's been 3 years since you did SaaStock, and then we had this year, the environment has been different. We've had more headwinds than normal. What did you see? What's changing? Or what were your takeaways?
Yeah, good question. So, I mean, I guess what I am seeing is that deals are still getting done, and there is still, I would say, a reasonable bit of investment. Certainly in the early stage, it's totally kind of slowed down on the growth stage, and investors are being very cautious. And I think we saw there was a keynote by Silicon Valley Bank at SaaStock, and he was talking about like all this amounts of dry powder that are just kind of there to be invested, but actually people are just being too cautious. Investors just being too cautious, and they're not wanting to invest this. So there's huge amounts of money there, but it's just not, nobody's doing anything kind of with it. And I think even then we were seeing something just relating to investors in that because a lot of not a lot of investment is getting done at these kind of later stages. That some of the investors that are kind of working, the VCs working for these funds, are perhaps having to do other things. They've got more time on their hands. Some are being let go in a kind of nice fashion. Where I heard that VCs, and I don't know if this is true or not, but they don't like letting people go, but rather they would say, why don't you go to business school or something like that? And then the investors kind of get the message and they sort of depart. But if you don't have a lot to do and if you've got no money to, or you're not allowed to invest the money, then perhaps, it's kind of interesting times for those growth stage VCs and also growth stage companies. But from the early stage, yeah, I mean, we just saw thousands of meetings like happening at SaaStock with the 400 investors that were there, plus the thousands of founders that were at the conference. So it'll be really interesting to see post event like what deals get done. It's always very hard to track, and in what time frames as well. So will it get done now or in the next few months, or are a lot of these meetings just kind of like precursors to, okay, like when we are feeling more confident in 6 months' time, we'll come back and potentially invest. So definitely around that, there's a lot of caution on that side, and I think the overall kind of theme for the conference and I think for the year, right, was around maximum efficiency, scaling efficiently. Definitely not growth at all costs. I think we've just kind of been seeing that and hearing that ever since May, and that was a lot of the conversation, right? Being cautious about this looming recession.
Well, it's funny because at the same time we say that, but the analysis of where people have invested, the little bit of investment that people have done, hasn't really bared that out. So it's kind of like at one time people are saying, responsible growth now, balanced profitability and growth. But it doesn't always bear that out.
Yeah. Also on that, whilst there is this message of being cautious, you're also hearing messages both at SaaStock and kind of outside about, well, those that like invest in marketing now and are aggressive now will be the winners. I mean, I heard this during COVID, and it's probably something that comes around a lot during a kind of time of recession. So we were hearing like, be cautious but also be aggressive.
Yeah.
And then also I've heard some like, now is the perfect time or the best time to start a company, right? Because a lot you always hear that a lot of great companies were created in times of recession and a market downturn. And there's a lot of proof points to that. So we're hearing a lot of that as well. Start a company now, it's the best time to do it.
Yeah, well, I mean, in some ways, if the market's off a little bit, there may be more talent on the market. It's just from a human capital standpoint, you might be able to find people or have access to people that you wouldn't get access to normally. On the other hand, some of those people are let going, maybe weren't the top people either. But it's an interesting thing. We always say one door closes, another door opens. So it's the thing. I had a question. In the report, they also noticed that early stage investment was off, was off even more so in the United States. But this goes back to a question I have, which is, figures lie and liars figure. But so data is kind of done. My question is that and I'd kind of, I guess this goes without saying, I'd like your take on that. I wonder if alternative financing models aren't putting a dent there, because I was there, Founder Path. I saw that, they'll finance you using your MRR. And it seems like there's a lot of alternative finance. And also it seems like bootstrapping, speaking of responsible growth, it seems like, especially the US companies, the young US companies, everyone was talking about bootstrapping. Do you think people are trying to avoid giving up equity, avoid taking money? And my question is, if that's the case, will there be a boomerang effect? And these companies, when they do go for scalability, there'll be a flight to quality, and they'll even get more money for less equity.
No, it definitely. I think interesting points, right? So yeah, like at SaaStock this year, I mean, we've seen over the last couple of years, certainly a rise in the movement around bootstrapping and bootstrapping founders. I've certainly been conscious of seeing that, although I don't have huge amounts of data
Oh,
around it, but certainly it's just been something that we're conscious of, to the point that for the first time ever at SaaStock, and this was our fifth conference, fifth global conference, that we did a bootstrapping stage to cater for the bootstrappers, because we've always been really, I would say, synonymous for being at the intersection of SaaS companies, founders, and investors. And most of our content, perhaps VC heavy, a lot of VC backed companies there.
sure.
So we did it for the bootstrappers this time, and it was very well received, and pretty packed out, standing room only the whole time. So I don't know like how many bootstrapping companies were there like as we speak, although I can get the data, but certainly it felt like a lot more than in previous years, and also because we're catering for that audience a little bit better. But definitely seems to be a rise of bootstrappers and people kind of holding on. And then also, when I speak to bootstrappers, and whether it's on the podcast or whether it's walking around the conference and we're talking about maximum efficiency, it's like, well, this is what they've been doing since since they started their business, right? So
Yeah.
it's not nothing new to them, right? And all these VC companies are being told effectively to act more like a bootstrap company. And if you're being told to act like a bootstrap company, then why don't you just be a bootstrap company and maybe not take VC money, potentially, arguably. But so yeah, definitely interesting time. The trend is rising, and I think on the point about alternative financing, I think actually that probably does have a correlation to this potential decrease in early stage investment, because you've actually got these companies like FounderPath and CapChase and many other revenue-based financing or alternative financing companies that in, I don't know, what is it, the last sort of like year to 18 months that they've sprung up.
Mm-hmm.
It wasn't really a thing, I would say, kind of like 18 months ago. And now, that's becoming a whole, I don't know, kind of
Yeah, a subset of our industry. Yeah.
Yeah, and it's a good option. I know companies that have actually. There was one company we did a SaaStock on tour. SaaStock London, SaaStock Local London, where there was a company that was doing about sort of 4 million in revenue, that had taken money from FounderPath, and that was to help them actually raise VC capital so that they had like more money in the bank, which was quite interesting. So to say that if you are taking alternative forms of revenue-based financing, and I think a whole part of the message there is like, don't give up your equity, and that's part, definitely with Nathan and FounderPath, right, which is good messaging.
Yeah.
But in some cases, people are using it really to kind of help them, boost the cash coffers, and then I guess going to be a bit more maybe aggressive on their GTM, and then to help them get to the metrics that they need to be fundable from VCs. But yeah, definitely, I think like so many companies are just quickly, easily connecting to companies like FounderPath and CapChase, and then within 24, 48 hours, getting a nice bit of cash in the bank to give them a little bit more runway. And so I think these are good solutions, and not giving any equity up at the same time.
Yeah. I think I spoke with Nathan Latka, who's the CEO. He's had a really successful podcast about bootstrapping and other subjects related to SaaS for years. And I was joking with him because I was saying, I think when I was a college student, I wanted to get a couch or something, and they had a thing like rent to own. And they took a week to approve my application, and he's giving people money in like 2-day turnaround. And hundreds, conceivably a lot of money. I mean, they have I think $150 million fund or something like that. So it's not, this is serious money. This is 6-7 figures money that they're able to turn around to companies if they've got MRR and ARR. I think it's when I saw that we were headed towards a downturn, I don't know how long you've been around technology, but I remember 2001. when we had the, or 2000 when we had the dot-com bust, and then in 2008 and 2000 the business models and everything were so bad related to the internet. I mean, a lot of the business models in 2008 and 2009, there we lost a lot more value as far as a percentage than we've lost currently, and things to be going well. But I think what's interesting is because the ecosystem is so much mature, I think things are going to come around faster, and we'll see different types of growth spur up, and I think it should be pretty interesting. Um, it's certainly an interesting time to be in this thing. What other what were some other takeaways you took from the show?
I mean, it's sort of it's difficult because
You're pretty busy, first of all.
exactly. I'd probably say like not a lot, right? Because I'd love to watch all of the content
Yeah.
that we have, and we've got 5 stages of content, and the problem is that every year, like it's just a pipe dream for me to be able to sit there and watch and consume the content. Because of just being like you effectively like pulled all over the place, or have a very kind of filled diary. So I was like, I mean, I did a couple of podcasts, sort of interviews on the podcast stage with Christoph Jans, where we were talking about early stage investment, and specifically, what they kind of look for, and the CEO of Personio, Hanno Renner, and then we had the CEO of GetAccept as well. I don't think there are any kind of like specific trends out of those kind of like 3 conversations, but then I was ended up having to like do a documentary, like filming, which again was around it was around GTM strategies, in a kind of recession, or in a market downturn. So again, just kind of really kind of leading around that sort of like theme of that. So yeah, unfortunately, like I didn't get the chance to watch much of the content, but we've recorded most of it, and and I also then have a pipe dream of like post conference sitting down with a tub of popcorn, watching all of the content, and then again that just kind of never happens. I mean, we will have hundreds of hours of it, but we will publish it, on YouTube, and it should be kind of ready in a week or 2 as well. But yeah, sadly, it's one of those things that I don't really get to see.
Interesting. What books I mentioned Nathan Latka earlier. What books, what thinkers, what people are influenced your thinking right now, or
Yeah. Yeah, good question. On the book side of things, I've been reading a lot of books sort of lately. I was reading a book which I finished actually because it had me so enthralled the week of the SaaStock conference. So I was waking up early to read, and even I think at the end of the day, when I was kind of like pretty exhausted, I still get a few pages in, and on the plane journeys there and back. So there's a book called The Slight Edge. I can't remember the name of the author, but it was actually recommended. I did a podcast with Zeb Evans, the CEO of ClickUp, and he cited this as his kind of like number 1 book, and it's the book that he gives to every ClickUp employee, and it's all about obviously like progressing, getting better. And I think ClickUp had this thing about being 1% better, kind of each day. But the Slight Edge was really good. It's just saying like these are the things that you kind of really want to do and look at in life to give yourself an edge over everybody else and to be successful. I love that type of shit, right? And so like people call them, or some people like I know my neighbors and friends call it like self-help books.
yeah, it does make me think of that. Yeah,
It's like I don't know if there's been a like negative connotation around self-help, but it is like it's development, and I've got ambition and drive, and I want to better myself. And if somebody like gives a recommendation around a book and I haven't heard about it, I'll pick it up and read it, and take things from it. And sometimes a lot of the stuff is like, hey, like you already know it. Like it's like, hey, you should read books, every day, and stuff like that. And reading is really good for you. It's like, yeah, no shit. But there is some other good stuff in there. But I did enjoy that book. It was quite a good, easy read. And now I'm currently reading The Score Takes Care of Itself, which is about Bill Walsh, who coached the San Francisco 49ers. And there's just lots of really good leadership lessons in there. He talks a lot about like football plays, or like American football plays, which like sometimes goes a little bit over my head because I'm not really, never really followed the sport, but in every chapter there is real leadership and takeaway kind of lessons, which are really good. So enjoying that. So I can recommend those two from a book perspective. From a SaaS kind of influencer perspective, it's changed, over the years. Like I would have said a few years ago, like people like David Scott, for instance, who's fantastic, but he doesn't really create much content, anymore. So you don't really kind of see too much about him. And people like David Sachs, I quite like from Craft Ventures and the All In podcast, super smart guy, but also not, creating a lot of content at the moment. So I would say now, like people like Dave Kellogg from Kellblog,
Yeah.
spoke with SaaStock, always does great content, both in the blog and also, as a speaker, just like he's a bit of a content machine. Who else? I was thinking about this earlier. Like Asia Arangio, she's quite good from the early stage folks. Obviously, Nathan Lacker,
I'm sorry, who's Asia?
Asia Arangio, she is the CEO of Demand Maven. She's based in Atlanta, and basically it's a GTM kind of agency where they're really kind of focused at the early stage SaaS founders, and she does some great content. So yeah, so I think people who do like some like very kind of like specific stuff. I would say again, like pronounce his name, Pep Layer, or is it Pete Layer or whatever, from Winter. He does some good stuff. I've been following a little bit of Chris Walker, but not so much at the moment. From he does stuff around like dark social, but sort of around demand gen things. So there are a few there, and these I would say not necessarily kind of like new kids on the block, but these are people that are doing and creating a lot of content around specific things for those in SaaS. Whereas the more, if you'd asked me in 2018, it would have been David Scott and Thomas Tungus, now it's quite different.
Are you based in London?
Sort of. I mean, it depends. We've got an office in London.
Okay.
I'm there like once or twice a week, and then I live in Ramsgate, which is the southeast coast of the UK, and it's a horrible rainy day here at the moment. But I'm technically nearer to France than London.
Okay. Well, I'm in the south of France, and it's a rainy day here, so you're not missing anything. So, I was just curious. Did you go to the Sifted conference at all?
I didn't. I wanted to go. The issue was that I think it was like 1 week before SaaStock.
Yeah.
But it was kind of like bad timing. It was like, could I really spend a day or two out of the office when we got so much to do? And we obviously had so much to do. And so I made the decision not to go. But I think it looks like pretty good. Did you go?
No, I didn't have the opportunity to go either, but I thought it was just interesting. I spoke to several people who were at SaaStock, and they said there was a markedly different mood at both, and that London or was just a little gloomier. A little gloomier. So I was just curious if you had any feedback on that.
Yeah, I mean, look, it's interesting, but when you say gloomier in terms of
the financial, like just general outlook and just positivity and anecdotally, the report showed that early stage investment was off in England as well. So so
no, I mean it is interesting to say. Like I think the vibe and the buzz at SaaStock, and I wasn't at the Sifted event, was great, and I think like for us, we benefited really from this kind of triple whammy effect of we were back to in person for the first time in 3 years, back in Dublin. People are back at SaaStock, which for a lot of people globally is a favorite SaaS conference, favorite conference of theirs, and therefore just like there was just such a buzz pre, during, and after, and online and in person around the conference. And I think that because of those three things, there was this like real vibe and element of positivity whilst there was still, some, data-driven, content around the markets. We saw this, Alex Ferrara from Investment Venture Partners did a session at our InvestStock event. And again, they're just kind of saying like, this is kind of where the market is and what's happening, etc. But I think overall, people were just kind of really kind of happy to be back and talking about obviously growing their businesses, but doing it in a sensible way. And obviously, I can really compare it to Sifted and their events. I do know, like, because obviously, like, you asked me where I'm based, and people often ask, like, why do we do the conference in Dublin? And no slight on Sifted or anything like that, but I've never really been to a really good conference in London. I'm sure they exist. I haven't been to one. And just what I find is that the ones that I've been to sort of in London, it doesn't have that same sort of buzz or vibe. And then after the conference finishes, like, people just disappear into London because it's such a big city. Whereas like in Dublin, it's a much smaller kind of city. You just bump into everybody that's at SaaStock all over the place. There's a lot of serendipity that happens, across the city, and it just like it really adds to that sort of vibe. So I don't know if that's any reflection on your sort of like the doom and gloom.
I don't know. Like you, I wasn't there, so I was just curious if you had any background on that. And I can see your point about Dublin. I mean, I thought Dublin is an incredibly human city. I'd never visited Dublin before that, and I just something everyone should know: the national museums in Dublin are free. So you can just go visit the museums, and they have incredible museums, and just amazing stuff there, and just a great city. My other thing I took away from Dublin as well is I just thought, for me, as a marketer, I think narratives are so important, and the thing I really like about the Irish is they're such great storytellers. I think every Irishman is probably a natural born marketer. I'm not sure their history is actually that much more interesting than anyone else's, but they sure tell a great story. Or as they say Irish, I guess, a great crack. Yeah. No, it's very interesting. Well, listen, I don't want to hold you up too much. Do you have any other contributions you'd like to make, or
No, I think that's good. I mean, apologies for being a little bit late there with the tech sort of mishap, but great to speak with you, and hopefully it's been sort of interesting conversation for those who are watching and listening and on replay. Hopefully we'll see a few people at SaaStock USA in Austin in May, and if any SaaS founders are looking to join a support network of other SaaS founders helping each other, you should check out the SaaStock founder membership. But it's great to be on here. Great to chat to you virtually. Shame we didn't get to meet in person in Dublin, but hopefully or at B2B Rocks.
Well, listen, as I said, I'm originally from Austin, or not originally from Austin, but I lived there a few years and like to go back, so maybe we'll get a chance in. Listen, thank you so much for your time. Best of luck there. I just want to insist on one thing. These shows, they're just they're important. They're a great opportunity to meet people, to exchange ideas, to learn, and like Alex pointed out, there are a lot of serendipitous events as well. So you get an opportunity out. Alex, thank you so much.
Just take care.
Right. Bye-bye.
Bye.
Yeah. Super interesting guy. There was a really good energy at his show. It was a lot of fun. Listen, I won't take up too much more of your time. Again, next Tuesday we have Axel Egre. We're going to be talking about building an MVP. If you have questions, please bring them. Again, I thought it was interesting. He said one of his favorite people is Killblog. We've already mentioned that as well. If his room is up there. So everybody have a great day, and we'll see you next Tuesday. I think 8th or something. Talk soon, and bye-bye. Oh, we gotta go to our end screen here. Oh, the end screen. Bye-bye, everybody.